Hello, care leaders. My guest today is Jonathan Copley, and today we're going to answer your burning questions about insurance. Or should I say, Jonathan will be. Jonathan, if you don't know him already, is the head of care and social welfare at independent insurance brokers McClarrons. And he's an expert in commercial insurance with more than 21 years in the field. Interesting things that you can expect to learn from this episode include why your care home should receive revenue loss coverage for a minimum of 36 months, how your approach to risk management can help your premium in the long run, and why cyber liability is more relevant than ever, and what to do about it. My name is Simon Parker, and this is the Care Leaders Network podcast. So without further ado, please welcome Jonathan Copley. Johnny, tell me, why is my insurance so high?
It's a great question and one that's kind of multifaceted, I think. I suppose it all comes down to what is value to you. You know, if you're going into a coffee shop or a restaurant or a bar and it's a little bit more expensive, but the service you receive, you know, the person recognizes you when you go in. They know what your normal order is. They make you feel welcome. Is that valuable to you? You know, that experience. So for when I'm speaking to care providers, the question is always, you know, I know you want to make a saving in insurance. It's not always possible, especially if I'm meeting you for the first time. I don't know yet. I haven't reviewed anything. I've given no advice. So I always say, you know, let's try and box that off in the corner. We'll always look at price and do whatever we can for you, but let's make sure the nuts and bolts of the insurance program is correct first of all, before we get to the price. You know, once you've got options, you can start making some choices about where you do want to spend money, where you don't want to spend money. And I think that's an important factor as well, is where clients do want to spend money. What's important and concerning to you will be different from somebody else. So some people, you know, might lose sleep at night worrying about cyber insurance and will want to take out a policy. Others will not. So it depends on a lot of factors. In terms of why is the insurance so high at the moment, what is high, you know, in terms of a premium? If you look at the overall turnover of the business and the insurance spend, you know, is it as high as you think it is? Is an investment in your time, does it take you a lot of time to negotiate the insurance? Is it dropped on you last minute? Is the attention to detail in the program there? Is it giving you lots to do mid-policy in terms of changes, or it not being suitable for local authority contracts, or that kind of thing? Is it giving you a headache in terms of an investment of your time mid-policy? So there's the pricing side of things, but I would say very much there's the price and attention to detail. And let's face it as well, especially on the care home side of things, these contracts of insurance are designed to pay out millions and millions of pounds when the worst happens to you. Which, you know, when you're on your darkest day, you know, and if the worst did happen, you suffered a fire in your care home, and not just your singular business, but maybe if you've got a group of care homes or something like that, that could affect the whole business, depending on the revenue streams, and jeopardize the whole business, you know. So how do we, I guess, rationalize the insurance spend, taking that into account with the levels of service that you expect, and get you through that really dark time? And I'm speaking from experience. I've had charities, I've had care homes that unfortunately have experienced fires in some unusual ways that you wouldn't necessarily expect them to occur. And I can say from experience that the process to go on that journey from start to finish can be a long one, and having that investment of time to make sure that the sort of T's are crossed and the I's are dotted pays dividends in terms of the claims journey. So I would just say always bear that in mind when you are buying your insurance, is what does value mean to you? Because you are going to use it if the worst does happen.
The balance between cost and value is, of course, always going to be a really, really important one. And of course, where the worst does happen, and unfortunately it inevitably does, that's why insurance exists. You do, of course, want to make sure that you're going to be well looked after and make sure that you've got all the appropriate insurances and also the support as well in those really, really difficult sets of circumstances. Um, I am right in saying, though, that generally insurance is going up. I've experienced it myself. Health insurance for me and the team, and car insurance, and all of that type of stuff. Generally, insurance has taken a bit of a hike, and it seems particularly acute kind of after COVID and things. So I'm sure there's various different drivers around that, but I think care providers they'll understand and appreciate the value. They're also still going to think to themselves sometimes, wow, that seems expensive.
And that's a fair point. Insurance is increasing. A lot of that has to do with claims volumes. A lot of that has to do with the insurance relating to buildings, contents. We've seen some dramatic increases in sums insured for buildings and contents to avoid things like underinsurance, where rebuild values have taken place and they've been much higher following COVID. Price of materials, labor costs, and everything increasing exponentially, and those rebuild costs have had to go up considerably as well. So there are some reasons behind it in terms of the premium allocated to those items. Equally, I think the insurance industry has reacted following COVID to some particular sectors, whether it be leisure and hospitality, where rates have increased a lot, care, where there is potential exposure for things like COVID, because the question mark is, well, what is the next COVID type of event? It's just kind of, we didn't expect it, but it's proven that these things can happen. How is it dealt with? And, I applaud care providers for the way they did deal with the pandemic. It was extremely difficult for them. Changing on a daily basis, policies, procedures, and just trying to do the best that they can for the individuals they support. Unfortunately, there's nothing to kind of ring fence potential claims. Care providers are open to claims, and insurers have to reserve responsibly to protect the rest of their clients, and that has an impact as well in terms of pricing.
Sure. And am I right in saying as well that there aren't that many insurers that actually operate within the care sector? Does that play its own part?
It does. Pre-COVID, there was still a small number of insurers who had specific products for care providers. During COVID, we saw a number of things happen. We saw most insurers close the door to any new business and stop writing new business. We saw some insurers pull out of the sector completely at a really difficult time, which left clients, if you leave the marketplace and the other insurers aren't writing new business, where do you place your care home insurance? It was extremely difficult, and that had an impact on pricing as well, with care providers having to go to London markets for other products. But I would say now there are some new products that have come to market that weren't available during the pandemic, which is great to see. They're just not necessarily household names, that are insurers that you've necessarily heard of. There's nothing wrong with that. They have a place. Absolutely, they do. But some of them are new entrants to the care marketplace. So it's just speaking to a specialist is the really important thing to tell you what are the differences in cover, compared to some of those traditional insurers. What's the potential impact in terms of any claims service? Are there any third parties involved in the chain which prolong claims service negotiations, that type of thing? Ironically, insurers do want to be in the care sector. That's the crazy thing. It's such a small marketplace, but insurers absolutely want to be involved in the care sector. It's a growing marketplace. Why would they not want to be part of that sector, which is only going to get bigger? They're a business at the end of the day. Of course they want to be. I think traditionally the problem has always been pre-pandemic levels of pricing. When I first started 13 years ago, a care home operator would be able to buy a care home policy for less than £2,000. So when you think about that, you've got over £1 million of buildings cover, you've got £500,000 of contents, all the liabilities that attach to running a care home. All you need is one allegation on a liability claim, and that premium's wiped out in legal costs.
Probably in the first day or two as well.
Yeah, exactly. So that was the problem. It was just priced too much at the sharp end, and insurers couldn't, as a business, make a profit from it. There was some pricing correction that tried to take place pre-pandemic, but I think with the pandemic, the net result was the market balanced to probably where it should have been for insurers. So I don't think we're going to see a point where we have a massive drop off on pricing. We do have some more entrance to the marketplace, which is bringing back some competitive aspect, but it's nowhere near the level it was pre-pandemic.
Right, sure. So in the banking world, there are these kind of new disruptors, if you will, to the traditional banking model, and they seem to be extremely successful. A lot of them have grown incredibly quickly, and that's because of a frustration with the legacy banking world, if you like, and they seem to be having a really big impact. Now, obviously, there are differences, but the disruptors, if you like, seem to be trying to work out all the things that are wrong with the legacy traditional world and trying to overcome some of those problems as well. Is it similar in the insurance space, in as much as you've got kind of more innovative companies trying to come to market to try and shake things up a little bit, or is it maybe still more traditional and insurers who have seen an opportunity and who want to try and make sure they can add some value?
Yeah, I would say it's the latter in the main. We've got some people, some insurers who exited the marketplace who are looking to get back into it.
Okay.
I think the new pricing angle has made them, with the data that they've carried previously, has made them, take a better look at the care sector and think, okay, is it now at a level that could be profitable and we can actually write some business. There are a couple of markets, one London market especially, who's come with more a risk management approach, which they don't go in at the smaller premiums. What they're looking at is quality. So not only will we give you the insurance product, we will also give you a risk management proposition that will help you manage risk as a business, and hopefully, maintain or bring down premiums long term, and equally help the insurer fight and defend liability claims.
Is that almost the almost care sector equivalent of having one of these GPS type systems that insurers put on cars to be able to track the way that the car's being driven, with the intention of being able to try and offer cheaper insurance to those of us who drive sensibly, and to rule out maybe some of them that are a bit more a little bit more racy?
Well, potentially there might be aspects of that. I think really it's a bit like when CQC come in, they see you and it's a snapshot in time. So an insurance survey is a snapshot in time of that particular day, and what's going on. So, but I think instead of it necessarily being an insurance related survey, some insurers now, and us as McClarrons, have built our own propositions, which is building connections with social care consultancy firms, who will come in and understand the insurance aspects as well as the actual running and operational side of the business. For the care provider, and be able to bridge that gap of knowledge and say, okay, let's have a look at policies, procedures, care planning. But what do we absolutely need to make sure is in place should somebody allege, or should I don't know, should a resident have a fall in a care home and break their hip and try and claim against the care home? How does the care home and that business put themselves in that best position to defend that claim? What would an insurer and the law firm attaching want to see from them to be able to do it? Is it is that doable for the care provider to put all that in place? What are the barriers to doing it? And if there are barriers, how can we do it differently?
Makes sense. So it's getting a more consistent understanding of the operations of the organisation and making sure that they're prepared in the
I
sets
think
of
so.
circumstances where things
Yeah.
don't go. Right, okay.
Look, we as the broker and the insurer don't want to see large claim volumes, and neither does the care provider, because inevitably that will mean one thing: your premium goes up,
Yeah.
which is not what anybody wants. So it's about looking at it and doing a deep dive. And I think one of the biggest things these days is information is king. I would say at this point in time, actually spending some time with your insurance broker, if they're worth the salt, is time well spent. They will ask you for more information than probably ever before, because insurers are asking for different types of information, depending on what their risk models and rating factors are. We've got some insurers who are really hot on staff turnover, how long care managers have been in place, what their CVs look like, usage of agency staff, and that side of things, really trying to drill down on the employer's liability angle. And then we've got other insurers wanting to know chapter and verse about what the building's made of, everything down to the type of insulation used, because they're really worried about the material damage exposure and the BI exposure in the event of a fire. So we're in a position where we're asking for more information than ever before, but information is king, and that allows your broker to go out to the various markets they've got access to. And hopefully that result will be more competitive pricing, better options in terms of cover, and all the good things you want at renewal.
Yeah, that was going to be my next question, actually, just about how do you go about lowering premiums? Are you saying that the investment in time with a good quality broker is ultimately the juice is worth the squeeze, because the better understanding you can of the organisation, the more appropriate and more accurate that they can be with their pricing? Ultimately, the balance between the value and the cost proposition should be met in the best way possible.
Potentially, look at it as a long-term investment. The more we know and understand about the client, the business, the buildings, the more likely it is we can streamline negotiations with insurers, because we've got all the information we need to do so. So we can approach more markets. We can provide the client with the feedback of, these are the various premiums, these are the differences in cover options. Where do you want to spend your money? These are the types of add-on products available to you, whether it be cyber, management liability, legal expenses. It's all about having options disposable to you and being able to make those informed decisions. As a client, if you can't make an informed decision because the broker's just given you the same product year after year after year, to me, that's not building trust. That's just doing the bare minimum to meet CQC requirements, local authority contracts, whatever it might be. The real, I would say, skill in what we do is being able to converse with clients, what their options are, answer questions competently about it. And the investment's long term, because the market changes. What if at next renewal there is a new player that's come to the market with a fantastic product and is on average 20% undercutting everyone else? You surely want to be working with a broker that, one, has really good access to market, knows what they're doing, and has all the information on file to be able to make that happen for you. So if we don't have that investment in time, we're not going to be in that position. And equally, there's the claims side of things. Our claims team are there. They're not involved in sales whatsoever. We invest in a claims team to literally take the client through that claims journey. That information on file allows them to do that, whether it's challenging the insurer on particular thought processes or decisions, trying to streamline the claims process. The more information we have on file, the more beneficial long-term it is for the client, whether it's sales or claims related.
Am I right in saying as well that, say, on the flip side of that, if you have I'll call it a lackluster relationship with your insurance broker, is that where opportunities for an insurance often arise because the context hasn't been set, the information hasn't been shared, the kind of some of the specific details aren't best known to the insurance broker, and then that's where gaps effectively start to appear.
100%. Yeah, 100%. Under insurance is a major issue still in the sector. Insurers are still doing studies and finding a wild percentage of commercial businesses in the UK are underinsured, whether it be buildings, contents, business interruption. We had a client who had some rebuild valuations done recently, and we're not talking about small levels of underinsurance. Sometimes it's millions of pounds underinsured on buildings. Business interruption is another one, especially with care home providers. We'd always say 36 months is a minimum span for your loss of revenue cover. Most providers are usually at about 24 months, but the structures are so large, and the planning permissions, site clearance, debris removal takes so much longer than you think. Equally, the claims process, there are certain hoops to jump through in terms of multiple quotes from contractors, sourcing various materials, especially if it's a listed building, time for planning permissions, things like that. It takes so much longer than you believe. So I'd always recommend 36 months for business interruption for clients. A lot of rebuild valuations will include reports on business interruption indemnity periods, and we're finding a lot of them are actually 4 years plus to rebuild, and that's when they're not listed. So
I mean, I'm not surprised. To be honest, doesn't certainly doesn't shock me that it takes that long to get these things organised. I mean, if you look at the process of building a care home from scratch, it takes there's all sorts of hurdles, there's all sorts of challenges in the construction world at the moment. Of course, that spills out into having impacts on all sorts of different things as well. What would you say the key trends are around underinsurance? Because I don't think people would knowingly be uninsured. You'd have to be quite a bit of a maverick to be thinking, oh well, it's fine. We'll just get away with it type thing. That seems like a risky business. Certainly for my risk threshold, I'd say that. What would you say the kind of the key areas are where people do end up getting tripped up? And of course, when they get tripped up pretty badly, I'd imagine.
Yeah, absolutely. I would say, first of all, just an understanding of what happens if you are underinsured and how it works. So for me, it's always about, okay, well, what are the consequences of it first off, and why do we want to avoid it? So let me give you an example. If you have a commercial property and you insure it for £100,000 for rebuild, there's a fire and a total loss. The loss assessors come out from the insurance firm and they are like, well, we've got a problem. It's going to be 200,000 to rebuild it. So we should have insured at 200,000, but we've only got 100,000. The average clause within the policy would kick in, and the amount payable on the claim is proportionately reduced by the amount of underinsurance. So what that means is that 100,000 you've insured for, you're only entitled to 50% of that, because you've underinsured the property by half. So the insured amount is reduced by half.
Got you.
So you end up with 50 grand when you really need 200 grand. So if you scale that up to a care home, when you've got all kinds of bank lending requirements that are supposed to be met, you've obviously, you rely upon that business to support your family and everything else. You're in a world of pain if you get that wrong. So there are some very competitive ways to make sure it's insured adequately. And the first one is to have a RICS qualified surveyor to conduct a rebuild valuation. Lots of care providers have market valuations, but you can pay a bit more to add the rebuild aspect onto that valuation. There's equally all kinds of much more competitive rebuild valuations that can be done via desktop survey. It's better than nothing, but I would still recommend a full site survey. Always reveals more than a desktop survey, and the level of detail is greater and much more accurate. if you have a listed building, I 100% recommend it. This is carried out. We find under insurance for listed buildings is always very, very problematic. And in the event of a claim, with all the restrictions around listed properties and planning permissions and everything else, it's complex, and it can save a world of hurt if it's wrong. So I would always say having that rebuild valuation and conducting one every 3 years is normally prudent.
Sure, got you. Any other kind of key areas where people are getting tripped up these days?
I would say just lack of information. The devil's in the detail.
Sure.
Things, again, modern build constructions, construction types, things like having solar panels. Usually if an insurer knows about them, they have more questions about them. Is the revenue being generated from them that should be detailed under business interruption? Things like alternative accommodation cover. Should there be a fire or some of the building been taken out of action? We had one care home recently that suffered a tree that fell from a neighbouring property during the storms onto part of an area of a flat roof, and it took out 2 of the bedrooms. They had people waiting to move into those rooms who they're at full occupancy and don't have any other space in the care home to move them into. So,
sure.
They've got a loss of revenue cover there. So
lucky in some ways that those were the 2 vacant rooms. Heaven forbid that it was another part of the home in some way. But of course, I guess that's not the point of the message. But yeah, that could have been pretty horrendous.
Yeah, and utilize your local broker. Quite often, they know people who can do rebuild valuations or have deals in place where you might get a discount or for utilizing their services. And that's not just rebuild valuations. It might be social care consultants to do mock inspections. It might be anything like that. Ask the question, speak to them, get to know them. At the end of the day, you're buying a product from them that if there is a fire or something like that, you've got to have that trust with them that they're going to step up and be there for you, because they do work for you at the end of the day. An insurance broker works for their client.
Talk to me about the emergent trends in care sector insurance. I feel like we've covered some of the key topics, but I guess where we are in the year and everything, looking into 2025, what are the things that you're seeing? What are the things that people need to be thinking about?
Well, one of the main things we're talking to clients about at the moment is cyber insurance.
Okay.
I think a lot of care providers have a misconception that there's some cover under a domiciliary care policy or a care home policy. Those contracts of insurance have never been designed to pick up cyber. And actually what you find these days is the insurer wants to be very, very clear, especially following COVID, about what they're expected to pick up. And cyber insurance is not one of those things. So if there is a cyber incident at the care home, it's only going to be fortuitous if you find some level of cover under the policy. And with the digitalization of social care, I would say cyber is right up there as being the next big thing in insurance that providers really do need to get a bit of a handle over and judge, whether they want a policy or not. Part of the issue is for brokers is that we are not IT experts. And I think a lot of the language used in a cyber insurance policy in the cyber world makes it very difficult for clients to necessarily understand it.
Sure.
It makes it very difficult from a sales aspect as well, because you don't want to scare people and you obviously need to sound credible. And there's a lot of terminology to wrap your head around. So I know we've been doing lots of training with insurers to try and get our heads around some of the key cover aspects and where we see care providers have issues in the event of a claim. Usually it's failings of humans, right? Because we're all human and we all make mistakes. We've all had one of those emails that looks legitimate and there's a link in it that you click that we shouldn't have. Or we've also had scenarios where care providers have tried to work from home, forgotten their laptops, logged into the company systems from home, and that's let a virus enter. That way, we've equally seen third-party software providers fall foul of ransomware and cyber incidents, which has locked care providers out of software packages that they're pretty reliant upon for. It might be scheduling and rostering, it might be invoicing and payments, which causes an interruption to the business. So the way a cyber policy would trigger, it gives you round-the-clock access to to somebody who's going to talk through what's happened and tell you what to do to mitigate that risk, so that you're not left as a client on your own in quite a scary situation that you don't really fully understand because it's not your world. Give you access to forensic experts who'll come in and look through all your systems, tell you what is actually wrong. Should the ransomware be paid? What are the merits of it? What are not merits? And we had some training from an insurer the other day, and it was mind blowing. In that, the data they're collating, that there are cyber criminals out there where there's almost like a trusted list. So, from the data that they've collated thus far, if we pay this ransom, what is the probability that they're actually going to do what they say they're going to do and delete the data and not release it?
Right, sure, yeah.
There's all kind of data in the background being collated, which is mind-blowingly interesting. And it's definitely a scary world. So speak to a broker who isn't just going to sell you a cheap cyber policy and is going to give you some options regarding or being able to talk through the cover, talk through the crime aspects, talk about what happens if there's a software failure or something of that nature. So, because it's much more than just ransomware or the system getting a virus.
Honestly, the whole cyber insurance thing terrifies me. The fact that you've now got people building cyber attacks that are automated through AI, meaning that they will proliferate effectively the internet at a scale that has never previously been known before. And that basically means that whereas before it was the big companies that would be the targets, they're just going to target everyone because they've got ultimate scalability in their approach. That whole thing, as a non-techie, just blows my mind, to be honest, because it just really, really puts into super sharp focus how impactful that can be. And everyone's heard of a horror story. It can be a little thing, it can be a big thing. You think there are organizations that operate in the kind of the wider care sector who have had complete meltdowns as a result of cyber attacks that have caused untold damage and impact and all of that type of stuff. And I'm sure the companies in won't mention any names, but the companies in question will have done absolutely everything that they can to deal with this set of circumstances as a result of the attacks. But with the things that they could have been doing beforehand to mitigate against the risk, I don't know. I'm not going to pass any judgment, but maybe.
It's very scary, and you got to think as well. I think you've got to think about these are sometimes governments that are employing people to conduct this work professionally, and that these people are now doing their own work in the background. They almost carry immunity,
right?
Because governments aren't going to imprison some of their best cyber people. It's absolutely mad and mind-blowing and scary. So I would say definitely, there are options for really good cyber products these days. And I think the average value of a claim is anywhere sort of 60K upwards, because the cost of forensic experts and things is astronomical.
Sure.
So I definitely say, for the one incident that could occur, you definitely want to be able to sleep at night and know that you've got a robust solution rather than sort of a cheaper off-the-shelf package. So definitely speak to your insurance broker about it.
That was going to be my thing, folks. I think the message loud and clear is if you're not already all over your cybersecurity, that's probably one of the next things that you should do, because the world looks pretty scary in that respect. So, Johnny, pleasure as always. Thank you so much for downloading your knowledge and your wisdom. Hopefully that will be very helpful for care providers coming into 2025, thinking to themselves, right, insurance, how do we tackle this? How do we get the best price? How do we make sure that we get the most value? And particularly on that last point, how do we make sure that we don't get absolutely obliterated by a horrendous cyber attack, which again, I just, the mind blows when you think about that type of stuff. But it's good to know that you're all over it and that you're in a good position to be able to help. So Johnny, as I say, pleasure as always.
No problem.